Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So if you've been out of the loop the past few days, there was a conference in Paris called Breaking Bitcoin where they talked about security and Bitcoin. There was also a presentation by someone who I believe is on Core talking about how there was an exploit with Core that got patched and is now fixed, sort of. I don't really know the details, so you're gonna have to read about it. Let me know what's really going on. As far as I know, everything's fine. Everything's safe. There's no reason to be alarmed here if you're a Bitcoin holder. It also somehow banned the SegWit2x nodes, so awesome. We've also been hearing some news of miners saying that they will not support SegWit2x. Even more good news. Pile that on with some SegWit transactions that have been hitting here more and more. If we just look at a chart, clearly this is trending up. We're getting more SegWit transactions per block, okay? And thank you P660R for that. Let's get to some charts. So I'm going to start with Bollinger Bands, a little unconventional for me. I'm known as the cloud guy, but I've been doing a Bollinger Band PowerPoint for our upcoming teaching course on trading with Colin Crypto and some guys from Berkeley. Going to be super psyched when that comes out. We're working really hard on that. But for now, here is the monthly Bollinger Bands. So I'm looking at charts, I'm thinking I'm super bearish right now, okay? I'm mostly in cash in the trading accounts. I'm holding my long-term holdings that I'm not touching, but when I'm trading, I'm mostly in cash. And I'll break it down for you as to why. I just don't see very much as far in the bullish case right now. So we can see how far out of the bands these candles are at this point. Now, believe it or not, this previous candle was actually farther out of the bands than this current candle that closed on last month, 10 days ago. Technically, this does set up some sort of div. I'm not going to say it's a confirmed bear div. If you read Bollinger Band width as a div, which you can, because it's an oscillator, you're getting higher highs in price, you're getting lower highs in the oscillator. That's a div. RSI, there's clearly no div in RSI. The div does not confirm until at least one or two candles after you see this. So, you know, in October, we could say there was a div here. It's going to pull back. This is the one. I zoomed in on this just to see what this looked like. So this is the top of the RSI right here. So this could go all the way to 0, you know, 0.9, 0.8. It's got plenty of room to go down. I'm just saying, yeah, it's overbought. No shocker there. It can just stay overbought long time as it has. No big deal. And believe it or not, the bands are less blown out than they were in 2013. Now, 2013, you also had a break of the bands quite substantially on that monthly November, I think it was, when Congress said Bitcoin was more than just nefarious actors. You can see how far it closed outside the bands, and we then pulled back, and the rest is history. But my point here, again, is I'm not an expert in Bollinger Bands, but what I'm seeing here is a pullback. Let's go to the weekly. Now, traditionally, just like the Kijun bounce, we're going to see prices pull back to the 20 MA in this case. That's what the 20 in Bollinger Bands represents. So again, we're seeing higher highs, clearly higher highs here. We're seeing lower highs in the Bollinger Band width. There's a div. We're seeing lower highs on RSI. There's a div. I talked about this last week. You can say it's confirmed more than it was last week because the candle's now closed. If this candle also closes red, you can say it's all but certain, and you'd expect at least a touch of the 50 on the RSI, and on the B bands, a touch of the median, the 20 MA. That's what the 50 represents here. You can see since, you can't see the candles very well, but since we broke out in 2015, we've just trended above the bands this entire time. Again, this is where the price sits relative to the B bands themselves, so it's above 50, it's above the median, which it has been the whole time, and you can see the B band width, very similar to RSI, almost verbatim, subtle differences, but overall the same, essentially. Again, showing that we've been above the 50 on the weekly since 2015. I don't expect that to break anytime soon. I'd expect consolidation at the 50 and then breaking before just a clean break, but anything's possible. Another thing I'm saying here is these are the widest bands since 2013. When you get wide bands, that's where moves go to die, versus squeezes where you get a birth of volatility. Okay, so squeeze is birth, bulge is death. We've sort of tempted fate with double period of volatility on a lack of a squeeze here. I don't really know what that means, if anything. Maybe Bollinger himself can comment on that. Then if we go to the daily, don't see too much relevance here. Again, we're kind of above or near the 50 on the B-band width. There's no div here. There was a subtle div here that's already kind of played out. I'm saying there's no clear M top. So back to here, an M top, what that would look like would be a touch of the upper band, a tap of the lower band, and then a touch again of the upper band. You can see it's loosely there. I don't really think there's a case for it. I'm saying here there wasn't a clear W bottom either. Again, this is like super nitty-gritty stuff, but if you're looking for a W bottom or an M top, you're looking for the second set of candles to be not as far in the out of the band. So there's a bull div essentially here. You'd be looking for a bear div here, which is what you don't get. You don't get a bear div here on the Bollinger Band width. And if we go to 4 hour, just a garbly mess, really. Don't really see anything worth commenting on. Again, you may be seeing a W here. You're getting a touch of the lower band, touch of the upper band-ish, and then again a touch of the lower band. We didn't make lower lows. There's no div here on RSI. I guess there's technically there's no div at all because we didn't get a lower low. You know, price never broke this low. Can't call that a div. It's just ranging. It's in a zone. Bands aren't tight. Plenty of room to tighten here before expansion. So bands, in my mind, overall not looking great for continuation, based on the high time frames at least. Let's go to Pitchfork. Here's a 4 hour super zoomed in Pitchfork. We get a low, we get a high, we get a low. You can see we're clearly outside of that now. That's fine. It invalidates this Pitchfork, no big deal. We got plenty of other Pitchforks. This just says we're likely sideways and not trending, which duh, that's pretty obvious. Again, on the 4 hour, we go to another Pitchfork, another low pre-April, and then high low, and we get what looks like a pretty decent fork. You're getting lots of touches on the diagonals. That's what you want to see. We're currently on a key diagonal area at the moment. We may consolidate here. We may break through. Overall, if we break this zone, it says we're going lower, which is, again, part of my bear goggle narrative, down to around 3,500. The upside target, somewhere around 5,500. That's going to change rather quickly as we're moving. This is only a 4 hour, so you get 6 candles a day. So as we're moving through this, we should see movement soonish. You know, we may get consolidation up and down, just like we did here. But overall, I think we're going to see down more than up. So if we go to the daily, you're not going to see a pitchfork like this in anything else but the index, just because of the way the candles are painted on the index. Initially, I wasn't a fan of this pitchfork. I'll get to that in a second. But what this is telling you, here's the trend. We're above essentially the expected trend. I like to think of this as just overbought, oversold. So we're way overbought on this. Generally, everything wants to touch the median line as many times as possible. We're getting touches after every yellow to red, however you want to think about that. But we're touching the median line over and over and over again. A median line touch here would be quite low, somewhere below 3,400. I don't know if we're going that low right now. We'll probably hit 3,400 sometime around the time of this diagonal, October-ish. I don't really know for sure, but somewhere, in here on the time scale. Should we break this diagonal just like the previous pitchfork, we're going to be pushing down lower. This is the next support. So I hope you're sitting down. I hope the children and pregnant women are out of the room. I'm about to show you a pitchfork that's never been seen before by anyone. Okay, I've seen other pitchforks like this, but I've never posted a pitchfork like this. I've added a few bells and whistles. Traditionally, I don't like extra zones on pitchforks. I see a lot of them. I see a lot of bad pitchforks. I see a few good pitchforks. I try to comment on those and say, good job. But again, you want your anchor points to be actual points on the chart. That's huge. So what I did here is I added 0.75. So the pitchfork itself, the median line 0.5, 0.75, 1. I forget what this line is. But what this pink purple line is the 1.272, which is a fib extension. I don't really know traditionally what people use with pitchforks past 1, but I'm going to go with 1.272. It looks good. Down in here, you can see we're getting touch. Great. My initial gripe with this pitchfork was that all of this was actually below the pitchfork, which isn't what you want to see. But if we add some wings to this a little bit, you can see that it actually looks pretty good. You can also see that this looks pretty good, and you can see how overbought we are here. You can see that great on this because it's zoomed out, but I'll post a link and you can zoom in the comments and the description below. So again, we're pushing time here for some pullback. That's no surprise. Bear goggles, I know. I could be completely wrong. I've been wrong in the past plenty of times. But again, all the same logic applies. You know, these are the support zones, and I think anything in the 0.5 range gets pretty hairy in general. We get a lot of busyness, so I think any extra lines in here not really needed because we're pretty much guaranteed to rapidly touch the median line multiple times. So now let's move to cloud. Let's go to monthly singled cloud, something I've never shown, I don't think, mainly because there really wasn't enough data. It doesn't look great. It's too overblown. Prices just moved up too quickly. I call this the abyss of bearish bull territory, where it would be above the cloud but below TK lines. You know, if price gets in here, it can certainly swirl around in here. It's harder to trade at higher time frames if that's the case, because there isn't a clear trend. But again, you can see how far away we are from this monthly. Kijun, similar to median line on Pitchfork, is the mean reversion point. You're expecting to hit that over and over again throughout a trend. So we're in no danger of breaking any of this as far as the bull case. It's curious that this 589 flat Kumo is all the way down here. I suspect it's some sort of 50% fib from all-time high, previous all-time high to some low. I tried to map it out. I couldn't really figure it out, but that's a zone we may touch years from now. I don't know why we would touch that, but it's something on the cloud that's there. Certainly an option. I don't really think that's realistic, though, ever at this point. Certainly if there's momentum, that's what you're looking for, is that 589 zone on the index anyway. So let's just compare some non-crypto stuff with crypto stuff. So here's Disney on the weekly singled cloud, non-default. This is singled crypto settings. It doesn't really matter. Point is, you see this beautiful trend on the weekly. Just absolutely, you know, you're getting multiple Tenkan bounces. You're getting multiple Kijun bounces. You're not breaching the Kijun this whole time. Then you finally breach the Kijun, and all the way out here, it's telling you it's going to start ranging. And what does it do? It ranges. Great. It's glorious. It's beautiful. Nothing yet has shown you continuation as far as bullish TK cross above cloud. You know, there's questionable continuation here. You're getting an M top here. Trade's very technical from what I can see. I haven't traded any of it. I've looked at it in the past a few times. But overall, if we compare this weekly to the Bitcoin weekly, we can see it doesn't look similar, and we'll see why. Here's another weekly singled. This is S&P 500. Again, just a beautiful cloud, nice gentle slope, plenty of Kijun bounces over and over. Here, not great, but you wouldn't have gotten stopped out. Generally, your Kijun bounce trades, their stop losses are on the cloud. So that's great. Okay, then we're getting more Kijun bounces. It says everything's good to go. We're bullish. Excellent. And here's just the default, just to show you there's really not that much difference in these settings. Overall the same. So now if we go to weekly, this is FX settings. Again, this is nitty-gritty stuff, but this is just examples to show you. We're getting, you want a thin cloud, but you don't want a cloud to get this stair thing. You know, that's great. It's bullish. It's definitely not bearish. But when I see that, I expect just pullbacks over and over and over again, because we just go up and then pull back on a sideways momentum. So that's what I'm starting to see here. Again, Kijun on the weekly, somewhere around 3K. Here's doubled cloud. Again, Kijun on the weekly, somewhere around 2,800. It's awful low from where we are now. I don't think we'll get that low. I think we'll pull up a little bit on these TK lines before price hits it. But starting to get this C-clamp on the weekly, which historically when we get that, we got that here, we got it here. You know, I can be wrong over and over again. But when I see this setup on high time frames, it makes me not want to go long more, because I see the potential for the pullback. The purpose of this is to show you as a trader, including me, that there are some signs of weakness here. It's clearly overbought, clearly way above mean, according to the cloud. Let's go to daily now. Daily looks fine. Again, you're getting this stair step thing. It's fine. But anytime you get a flat, you know, a landing on the stairs, you're going to pull back a little bit. We're starting to get a landing on the stairs here. Cloud will go flat. That means an increased probability to hit this 3,500 zone. You know, there may be an edge-to-edge setup a month from now. I don't think we're going to go sideways for a month, but it's certainly possible. If we went sideways for a month here. The other thing I'm seeing on daily is the lagging span starting to enter price. When I see that, it's the earliest signs of weakness in any trend. And we saw it here. You'll see it anywhere in here. You'll see it here. You'll see it on any time frame. You know, this is a healthy trend. Lagging span clearly out of price. You know, it's not rocket science. This is clearly healthy. This was healthy but quick, and then we're getting, you know, flat. Not rocket science, but again, this is the first sign of weakness that you'll see. So I'm kind of expecting, just like if I play around with fractals, I throw a fractal in here, something like that is certainly possible. We're just like dip down. Now this was a triangle that consolidated for a month before it resolved, so I don't really know what it looks like, but that's an example. Back to when I was historically wrong. I was historically bearish here. There was definitely a rising wedge which broke up. I was historically bullish here. You know, Pitchforks hack stuff happened. So look, I've been wrong plenty of times. That's okay. But when I see these signals, every time I'm going to say the same thing. That's just my system. That's what I use. And then lastly, let's change the field a little bit. So what I did was invert the price. People often do this when they're kind of used to seeing price a certain way. So this is basically the opposite of current price. So the question is, do you expect continuation here with this structure, this candle structure? I don't really expect continuation. It kind of looks like inverted head and shoulders. I'd expect a similar pullback as we got here, you know, pull up. If we add cloud to that, again, you're getting the C-clamp. I expect reversal all day on this, on a bearish case. Kind of nitty gritty. Not everybody's going to follow all of what I just said. That's okay. But I'm just setting up the bearish case as best I know how. I don't really see much for continuation here. That's all I have for today. Like, dislike, comment, share, subscribe. Hit me up on Twitter, Telegram, donate, and happy trading.